Hello everyone, this is Flora from Fabulous Accounting Solutions. Recently, a lot of clients ask me if they need a family trust. So today's topic is about why you need a family trust. Then you can make your own decision on this. Now we start. To help you make your own decision, firstly, you have to know what's the benefits of setting up a family trust. There are two major benefits from setting up the trust. Firstly, that's the asset protection. When our assets are in a family trust, we no longer have a legal ownership of them. The assets are owned by the trustee for the benefit of our family members. In this case, then we can get three benefits. Firstly, protect our assets against any claims or creditors. Yeah, because if you invest in a business or if you are running a business, if you just want to protect your assets and just in case you get failure in the future or just in case liquidation of the business, so you want to protect your personal assets. If you are the director of the business, if the business got failure, liquidation, and if claimed by the creditors, and the business have no money to pay back them, and in this case, if you already put all your personal assets in your family trust, and that creditors have no right to claim your assets from your family trust. But if you didn't do that, if you still under your personal name, they still can get their money back by forcing you to sell your personal assets. They can take the legal action to do that. This is the most important thing. And secondly, if when you set up a family trust, if the trustee you set up as a company, and once you pass away or once your children grow up and you want to transfer the management from yourself to the trust management from yourself to your children, you can just simply change the company director's name, change to your kid's name, and they can in control of the family trust. So that means it's easy for inheritance. You don't need change any assets title's name, and wouldn't bring in any stamp duty payment issues, wouldn't bring in any CGT events, the capital gain issues. So it's save massive money. Thirdly, they can manage the risk once you pass away, because some people got marriage breakdown before, and if you are the manager in control of the trust, if that's your family trust, if you cross out your ex-partner's name from your trust, if you cross out him or her as your family trust beneficiary, even you pass away, you have no right to claim your family trust's assets, so they wouldn't get even 1 cent. Now we move to the second major benefit of setting up a family trust. The second major benefit that's from minimizing the tax. We all know you set up the family trust, mostly that's a discretionary trust. That means you can have the flexibility to do your income distribution. You can allocate most of your trust taxable income to a low tax bracket beneficiary. And you can just if you have enough low tax bracket beneficiaries there, maybe you don't need distribute any trust distribution on yourself, and then you don't need to pay any tax on this. Yeah, so that's in this way you reduce the whole family group's tax. Another benefit you can get from the land tax, if you purchase a property through your trust instead of in your personal name, because if you already purchase a lot of houses and you already need to pay land tax on your personal name's rental properties. In this case, if you set up a family trust, use this family trust to purchase another house, and this house can get a tax-free land tax threshold again in the trust, so you can get the benefit from here. Okay, after we talked about all these benefits of a family trust, now we move to the family trust disadvantages. So what's the disadvantages of setting up a family trust? There are 3 disadvantages here. Firstly, any income earned by the trust that's not distributed is taxed at the top marginal tax rate. So to avoid this case, we have to distribute all trust profit into beneficiaries. So we can't keep any the income into the trust, just like a company. Company can keep all of these profits in the business in the company, but trust you can't. Otherwise, you have to pay top marginal tax rate. So we have to distribute all out to reduce the trust tax rate to nil. Secondly, distribution to minor children. So that means if your children under 18 years old, it's better to only distribute them around 400, because if the taxable income distributed to the kids and $416, the kids don't need to pay any tax on this, totally tax free. But if you pay any extra to them, the tax rate very high. For the minors, the tax rate, any extra, the tax will be up to 66%. That's much higher than even an adult's individual taxpayer. So I wouldn't suggest you to pay a kid over $416. Thirdly, the trust cannot allocate tax losses to beneficiaries. So that means if you have some investment in the or business in the trust, and if at the end of the financial year, if they got net losses instead of net profit, the losses cannot distribute to individuals, and the individuals can offset against their personal income. You can't do that, so it's quarantined in the trust. You have to live in the trust, and for future use, maybe the future, if you got profit, you can offset the future profit, but you can't use that to reduce your personal tax. So just think about that. Yeah, if you have any questions, yeah, please leave a comment below, and you can find my information in the description box. Yeah, and then you can talk to me, and we can discussing and give you solution or advice on this. If you like my channel, please don't forget to subscribe, hit the like button, and see you next week. Bye bye.